Welcome to XM.com. I'm Cristina Marujos, and you're watching today's Daily Market Comment by Ref Boyajian. Equity markets were back in the red on Friday after Wall Street's rebound faltered on Thursday amid increasingly hawkish language from the Fed, a troubling inflation outlook, and no let-up in the spread of Omicron. Fed Vice Chair nominee Lael Brainard was the latest to voice support for rates to be lifted as soon as asset purchases draw to a close in March in her confirmation hearing before Congress yesterday. But the March timeline has already been mostly baked in by investors, and what's starting to scare markets is the growing talk of a fourth rate hike in 2022, along with an early start to quantitative tightening. The threat of the Fed withdrawing stimulus much more aggressively than anticipated has taken the steam out of the tech rally. Tech stocks were again the main drag on Wall Street on Thursday, pulling the Nasdaq down by 2.5% and the S&P 500 by 1.4%. Value stocks outperformed, helping the Dow Jones close lower by a more modest 0.5%. An upbeat earnings report by Delta Airlines yesterday failed to excite the broader market. Banking stocks, including JP Morgan and Citigroup, will get the earnings season fully up and running today when they report just before the U.S. market opens. E-mini futures were last trading up, pointing to a more modest rebound, but European and Asian shares were sharply lower. The mixed data isn't helping either, as U.S. producer prices were slightly softer than expected in December, but weekly jobless claims came in somewhat above estimates. Soaring Omicron cases across America could be starting to hurt the labor market, as hospitalizations in the country have now surpassed the peak from the previous waves. It hasn't been a particularly good week for the U.S. dollar either, as the Fed's hawkish tilts have had the opposite effect on long-dated yields, which slipped yesterday. Bond traders don't see U.S. interest rates peaking very high now that the Fed wants to act swiftly in containing inflation. But the dollar appears to be steadying after 3 straight days of losses. The pound extended its gains, and the yen was mostly positive too, on reports that the Bank of Japan is making preparations to guide the markets for a rate hike. This was today's Daily Market Comment here at XM.com. Have a great weekend.